Goldfields has mines in Australia, Ghana, Peru and South Africa.
Really, remember, they split it in half. Sibanye got the South African assets, and the one South African asset they retained was South Deep. But everything else about this company is offshore. It's really an Australian gold producer plus South Deep, the Australian being St. Ives, which is actually a pretty good asset.
And 64.5 billion rand in terms of market cap. There's no PE and a dividend yield here of 0.32%. Of course, Nick Holland still sitting firmly at the helm of this company.
Long run.
Yeah. Look, and not dissimilar. I mean, probably better quality assets. Though South Deep has never quite delivered what it's promised. I mean, that promise has been around for 15, 20 years under different management.
Fantastic gold deposit, but
the ore body and everything.
And we know the vagaries associated with deep level mining.
It's very difficult. But also same, average cost of about $880, $890 per ounce. Average yield of 2.1 grams per ton. These companies have done fantastic in getting their costs down, trying to make it profitable in a low environment. But they, the same as any other commodity company, is still critically dependent on what the dollar price does. Last 6 months, dollar does well. They generate cash flow, they generate profits. Earnings go through the roof, but in 6 months' time, if the rand, the price
that is the risk with any single commodity exposure. In terms of
these guys are probably more geared than most commodity producers. That's the issue.
At the beginning of the show, we were talking about MTN, which share price went up because they put up their prices. A gold producer can't say, we're putting up our prices. That price is determined in global markets. And then there's the currency issue.
Yeah.
In the case of Goldfields, it's a combination, probably more susceptible to movements in the Aussie dollar to the US dollar, which I have no view on. I don't know which way that's going.
Aussie dollar is still a commodity producer. It's like South Africa, but the currency is way less volatile over time.
Yeah.
It's much stronger
we did put up the share price graph at the beginning, but I want to put it up again because you can see...
It's not quite as impressive as Anglo Gold Ashanti's, but it is moving in the right direction and showing some colour, and certainly it's had a good year so far.
It has had a good year. Any comments on management, Nick Holland?
No, look, they've done really a good job. I mean, the company they spun out, Sibanye, has done significantly better than what their share price has done.
We're going to talk about Sibanye in just a moment.
Maybe they're regretting that particular decision, but it's a gold mine. When I started in investments, gold mines were 40% of our index. I think there were over 30 individual mines listed. Gold mining has been very difficult for decades now.
And one of the things they did was to consolidate as a result of what Wayne's talking about. Remember, they just sort of hoovered each other up.
Hot or not?
I'm going to go not hot on this one. I think production-wise, we're still baking into the cake some upside associated with South Deep, which has been notoriously slow in delivering its investment promise.
Not hot?
Not hot.